Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, April 17th, 2020. As always, please hit the like button, subscribe to this channel, and share this video with others. So despite, millions, literally, of Americans, newly unemployed Americans, the stock market is bullish, or rather, stock market is within striking distance of bullish levels. NASDAQ is already there, so go figure. Healthcare again is also already back in the bull market and it's actually approaching record highs. We were trading it, and I will show you this trade. Gilead also pops higher as the encouraging COVID drug result trial is publicized. So overall, very interesting picture, but the real economy versus the stock market question is still out there, and I can already hear lots of angry voices. Consumer discretionary, probably the most important sector of pre-virus economy, approaching breakout levels again, and one of the components of the XLY Dollar General will actually look at it, and I'll show you how I trade basically. We'll look at bonds, junk bonds, investment grade corporates, and municipal bonds, as they are actually again approaching records. So lots of intervention from Federal Reserve is helping this. Nothing is really helping oil as it hits new lows despite large cuts. So it's just not doing great. Copper is interesting. I will show you copper. It's kind of showing signs of life. Gold is approaching multi-year highs and actually all-time highs. So with all the Federal Reserve intervention, it makes sense. And I'll show you Bitcoin as well as it approaches. I'll show you what I mean at the very end, so stay tuned. It's kind of a little bit hard to describe without looking at the chart, but it is the development I'm seeing is most likely going to help the bulls. So if you think Bitcoin will go higher, then stay tuned until the end of this presentation. So as always, I will be using my own indicators to show you how I think and show you how to open positions. If you have my indicators, and they're called, where I'm hovering right now, Master Charts Trading Price Action Indicators, you can get them by you must first go to MasterChartsTrading.com, one word, MasterChartsTrading.com. Click on the sign up right there and sign up for one of the services. Now I have alerts, or rather you can call it newsletter, and I have the trading indicators. So right now I'm referring to trading indicators, and I'm showing you these lines on the chart: the green, the blue, the red, and the yellow lines. They are very helpful to me and to many of my subscribers to just visualize price action. So we don't have to guess where is the support, where is the resistance. It's just right there, you can see it. So on this chart, S&P 500, these are mini futures, so this is probably the most important chart in the world. You can see that we had a big drop from February into late March. Then we had basically bottomed out here and rallied. So here is where I'm hovering on the 6th of April, is where the resistance has been overcome. You can see there was a close above the red line. So red line indicates resistance because the price was below it. So you can see a couple of, one on the 26th of March, 27th of March, and on the 31st of March, there was a touch of the red line and then a move lower. But again, once on the 6th of April, the resistance has been overcome. So right now we're within striking distance of bullish levels, and bullish levels are, as you know, if you are one of my subscribers and if you're watching the videos consistently, you can see it, 2938. It is the bullish level. If we see a close above the blue line, the bullish level at 2938, I think that's it. So this is this whole thing is basically over. If we see a close above the blue line, very likely we will see new highs. So, but how is it possible? Because I keep hearing it's just not fair, right? And I listened to Jim Cramer, and he was saying the same thing. There was I don't have it, the TV screen capture, but there was a kind of crazy TV screen capture where it says 16 million of Americans are unemployed, and stock market had the best week since 1938 or something like this. So does that make sense? Not really, but if we look from purely point of view of Federal Reserve, just providing tremendous amounts of money, liquidity to pretty much every corner of the market, then it would make sense, because money has to go somewhere, right? And in this case, it's just going back into the stock market. So people, funds, big traders, etc., they're getting this money from Federal Reserve, and look what's happening. We're again very close to the bull market. So the bears had a decent, run. The bears had an opportunity right there on the 6th, maybe 7th of April, but they blew it. There was no signal to short here, so I didn't short this. This was just a downward arrow for people who are, adventurous. So now again, we're very close to bullish levels, and you go figure, I kind of feel really bad, because it's not fair for all of those people who lost their jobs, right? And I am already seeing news of quite disturbing news, actually, especially out of Michigan, where I see our armed protesters, in the capital of Michigan, Lansing, with guns and without masks to protect them from the virus. So it's a precarious situation from the social point of view. But if we just do absolutely nothing and we just ignore everything and we only concentrate on this, what we see in front of us, then looks like we're approaching bullish levels. And if we're approaching bullish levels, I would be buying, basically. If we close above the blue line, I would be a buyer. I would start buying various stocks, various stock funds, etc. Is it fair? I don't think so. But I mean, this is just basically the way this market operates, and it's unfortunately not very fair. So S&P 500 ETF SPY, same thing, very close to breakout, to the new bull market. QQQ, the NASDAQ, is already there. Yeah, right there on the 14th of April. There's the breakout. So this whole collapse basically was negated, and now we're gonna start to buy again. XLV healthcare. This sector is actually the first one to break out. This one broke out on the 8th of April, right there where I'm hovering. And you can see it already is approaching record highs. The record highs were not that far off, right there, just a few percentage points. Now people might argue that this makes sense, because healthcare right now is probably one of the biggest sectors in demand because of the COVID crisis and lots of people being sick. So yes, business is booming for healthcare, but as I keep saying, the correlations between the various stock funds is very high. So if we're seeing NASDAQ, the QQQ, the actual NASDAQ 100 ETF with companies like Google and Apple are breaking towards bullish levels, we see healthcare, then I'm starting to wonder if we're going to see another bull run. So one of the companies within the healthcare sector is Gilead. I didn't personally trade it. Actually, this was an alert to my subscribers. On 14th of April, you can see it's already up nicely, about 10%. It's approaching record. So yesterday, or rather today and Friday, a big gap up, so plus almost 10%. And this is as a result of promising data from the COVID treatment drug that they have, that the Gilead has. I mean, it's wonderful news, and hopefully it works. I mean, I can't say how happy I am if it works, because eventually we'll need to end the lockdowns and treat our sick, and if we have a pretty decent treatment like what I'm hearing about this Gilead drug, then wonderful. But just to look at this chart, you can see it's very choppy, lots of crazy action. You can see back and forth. But overall, if you notice, with all this chopping around, there is still no close below the yellow line. For stocks, I use the close below the yellow line as a line in the sand to say, okay, this is no longer in the bull market. And you can see on Gilead, it never actually made it there. It kind of got close on 16th of March, but it never actually made it. So Gilead remained in the bull market in an uptrend throughout all of this craziness. And now it just reaffirmed itself. The uptrend has reaffirmed itself. So this is the essence of trend trading. We need to define the trend and then trade in the direction of the trend. So my indicators will help you to, number one, define the trend. Number two, to trade in the direction of the trend. So you will be able to find correct price levels of where to enter and exit position. In addition to, at least knowing, am I buying or am I selling? XLY, this is consumer discretionary. Again, this is one of probably the most important sector of the economy. Contains lots of restaurants, lots of discretionary stock. I mean, I think about 20% of this ETF is Amazon, so it's very top heavy. But still there are other retailers like Target and TJ Maxx, etc. within this. But notice that it's so close. Yeah, the blue line is right there. We're at 112.93. Blue line is one. It's like $1 away, not even $1 away. So I am thinking that if we close above this line, then we could easily make new records. So that's consumer discretionary. One of the stocks that caught my attention from the consumer discretionary holdings is Dollar General. So again, the way I trade, I look at my indicators. If I have a close for stocks, if I have a close above the blue line and I have not yet had a close below the yellow line, we're in an uptrend. So that's all I need to know. Where do I buy? At what level do I buy? I buy on close above the blue line. So right there, for example, was a good opportunity on 31st of March, right there. I didn't actually trade it, but I'm just showing it to you as a good example, and you can see it's up 21% and looks like it's set to continue. So, very simple. It could be any security, pretty much. Pretty much all stocks we can trade with my indicators, and forex and gold, etc. I'll show you in a second. But overall, very simple. You need to simplify your trading. Don't make it more complicated. You can see I have no indicators. I don't have any MACD. I don't have any RSI. I don't have any whatever moving averages, etc. I only have my price levels where I want to be buying or selling, and do I want to be buying or do I want to be selling. So my indicators not only show you the trend, which way the price is going, but also at what price level to enter. Right, let's switch gears just a tiny bit. Here's the junk bonds. I mean, junk bonds were just a complete collapse. Now, I talked to my friend. He understands much more about bond markets than I do, and we're going back and forth with some really in-depth letters. I sometimes don't understand like what he was referring to, but I can see the price. I can see the enormous collapse here for junk bonds. And basically, at this point, the Federal Reserve came in and said, okay, we're going to be buying pretty much everything. So, this decision by the Federal Reserve to start buying junk debt is, what I understand, is somewhat problematic because junk bonds are, well, they're literally very low quality bonds and they're from companies that have been downgraded. So I am not 100% sure where this is going as far as the Federal Reserve mandate, to keep the inflation low, etc., and keep the economy and keep unemployment low. So, junk bonds correlate highly to stocks. In other words, if junk bonds move one way, stocks will most likely move in the same way as the junk bonds. So the decision by the Federal Reserve to start buying junk bonds could later on come back to bite them. But I guess they had no choice. Because if they didn't start buying junk bonds, you can see a downward facing arrow right there on the 1st of April. I think the shorts would have just killed it. Here they rescued, basically. They bought out all the shorts here. They closed all the shorts. You can see a huge gap here. Because the short sellers probably started shorting right there on the 1st of April, duly so, because it's a wonderful opportunity to short right there. And then the Federal Reserve just said, okay, no more of this nonsense, and we just started buying everything. So right now there's a large gap here. Will it get filled now? Will it get filled later? Obviously nobody knows. The fact of the matter is that junk bonds right now are in an uptrend, so we should be trading them accordingly. In other words, we should be buying them. Same goes for municipal bonds. Big drop. Just all of these bonds just completely collapsed, and then just as fast they came back. So this is Federal Reserve to the rescue. So don't fight the Fed. In other words, the Federal Reserve wants to be buying, then let's buy as well. So municipal bonds, same thing, basically are now back in the bull market. And the same goes for LQD, investment grade corporate bonds. Also very large drop in the same V-shaped recovery, approaching new records. So, Federal Reserve to the rescue. We'll see if this action somehow will change the world. I think the world has already changed because of the virus, and now Federal Reserve is making this unprecedented. I keep saying this word unprecedented because it literally never happened before. But Federal Reserve is now making these moves that are just, never heard of. And people are having a hard time wrapping their heads around them. I try not to do that too much. I just try to look at the chart. So I try to not overanalyze things. If the price says buy, and these are actual alerts right there, 30th of March and the 7th of April, I actually send this to my subscribers. The price says buy, so we keep buying. Right, let's switch gears and let's look at oil. And I'm still, occasionally hit myself because I missed this trade. I could have shorted oil right there on the 23rd of January for a 64% gain if I held it till now. Yeah, sometimes you miss just incredible trades. That's your luck. Here on this chart, somewhere, a few days ago, Russia and Saudi Arabia agreed on some production cuts. I don't see any reaction. I see opposite reaction to the production cuts. I think it probably has more to do with the demand drop than supply excess. But in this case, we have both. We have too much oil and not enough demand for it. So overall, bears had a field day. I missed a trade, but right now I would just do nothing and just wait for a bounce and see where it takes us. Copper, very interesting chart. Now copper looks interesting, so you can see also big declines here, kind of similar together with oil. Now you can see that it came up from the lows here on the 19th of March into April. And now, notice today, actually on Friday, you can see that it overcame resistance. So this resistance was at 2.327, and now the price has closed above it. You can see that the blue line now is closer and getting closer and closer. In other words, bullish levels are getting closer to the price action. So perhaps demand for copper will increase soon. We just need to wait a little bit and see if it continues higher. But overall, this is promising price action for the bulls, for copper bulls. Gold also, don't question yourself. Just trade the chart in front of you. This is an actual alert right there. The 23rd of March. Sent to my subscribers, good for about 12% gain. I actually myself opened as well, GLD. There it is. I bought on the 23rd of March, right there. I bought at 146, and now it's up. Let's see, about 12% or so. So, very nice trade. I'm not complaining. I have a couple more. I think I have another. Gold related, I have KGC, so KGC, Kinross Gold. I bought calls on this one and it just took off. Calls, the options move. They're like underlined, so Kinross Gold is underlined but on steroids, and this I'm up like close to 50% here, I think. So pretty wild. But overall, yes, makes sense. Gold is going higher, probably due to all of the intervention by the Federal Reserve. Yeah. GDX, gold miners, ETF, same general principle. Again, a couple of alerts right there to my subscribers, 25th of March and another one here on the 6th of April. And the gold miners look good. We could see, continuation higher. So gold miners, make sense in what appears to be an inflationary time period. Finally, let's wrap it up with Bitcoin. So Bitcoin, I wanted to kind of reassure the Bitcoin bulls that I am not a perma bear, not a perma bull. I don't really, care about Bitcoin one way or the other. It's just numbers. It's just bars on the screen. So here we were shorting Bitcoin. You can see downward facing arrows. They were very successful trades. So right this instance, again, you can see where I'm hovering right now. Even right there where I'm hovering, the 6th of April, the resistance has been overcome, and now the indicators are kind of curving down. So what this means is you can see the narrowing of a trading range. So as just a few weeks ago here on April 8th, 9th, you can see the trading range was about 5,600 points right there. But right now the trading range is about 5,000 points. You can see distance between yellow and green. So this is a narrowing of a trading range, and when this narrowing of trading range happens, usually it's a sign that a trend change may be forthcoming. So I'm guessing, my best guess, if we don't roll over here and close below the red line again and just collapse, then we could actually kind of continue higher and eventually get to the bullish levels, which are currently at 8595, where I'm hovering right now. Again, you can get your own indicators. Just register at MasterCharts Trading. And once you register, I will open the door for you on TradingView. So again, we have 3 services. We have alerts, which is basically a newsletter type of service. All services have free 30-day trial. I send alerts about all kinds of stocks, small caps, large caps, cryptos, oil, gas, gold, etc. If you also just want to trade in indicators, then you can have that as well. And I'm talking about, of course, these lines in the chart, so you can trade on your own. And the best deal is, of course, alerts and indicators, currently still on sale. So sign up when you get a chance. That's it for this week's recap. If you have any questions, please don't hesitate to ask. Thanks for watching, and have another great trading week. Bye-bye.